Let me just begin by bringing up a chart of the US dollar index because there's a very important technical picture which I want to bring to your attention. The price of the US dollar against, of course, the basket of foreign currencies which it trades against continues to appreciate in value. As you can see, based off Friday's candlestick, the daily candlestick, we have what we call a shooting star candlestick, and it's occurring right at a very logical area of resistance. The US dollar is a chart which I've been following very, very closely since it broke out a couple of months ago. And about a week or so ago, I highlighted this pivot point or this resistance level at 91.9 cents as a very, very reasonable area of resistance. Now, if I go back to the weekly chart and show you what I'm looking at, this area, or what I'll do actually, I'll change to the monthly chart. This area where we're trading at the moment hasn't been revisited since 2005 and 2006. Since then, or if we go back further in time, it goes back to 2004. It acted as a support level in 2003. This price point is a very, very significant level for the price of the US dollar. Again, going back to 1998, it hit this level as support. Now, I can go back historically and show you why this level is as important as what I am, but I think you get the picture just by looking at that monthly chart and just how far back in time we have to go to see what price is done at this significant juncture. Now, right now, again, going down on the daily, we have what we call a shooting star candlestick, and this is very bearish, or it has very bearish expectations for the market moving forward, or at least for this technical chart. You can see that we've appreciated in value incredibly since breaking out at 81.61. We haven't had any form of a pullback really since breaking out. Yes, we've seen maybe 2 weeks of consolidation during the month of October. Yes, we've seen some form of a sideways moving dollar during the months of November and December, but we haven't seen a pullback down to at least the simple moving averages, and we definitely haven't seen a pullback at least down to that 50 exponential moving average. There's no doubt whatsoever that the US dollar is moving into some form of a bullish trend. We can all agree on that, but during the phases of a trend, any stock, any market, any ETF, any commodity, any currency, it needs time to retest, to retrace, to slow down, okay? Let go of the overbought nature. As you can see on the oscillators right here, we're extremely overbought on the Stokes, the RSI, and the MACD. It just needs time to rest before again we can push higher. Now, what does this mean for the markets? Generally what happens is that the three US markets, the Nasdaq, the Dow Jones Industrial Average, and the S&P work inversely to the price of the dollar. So if we're looking at the dollar right now and we're expecting the dollar to potentially pull back and retrace, let me just bring up the dollar for you. I need to put in a dollar sign before the D, so it brings up the right chart. If we're expecting the dollar to retrace over the coming month or so, over at least the next 2 weeks, that should mean that we should see a bullish pop in the price of the markets. Now, combining where we are on the Dow Jones, you can see we have on Friday a bullish engulfing candlestick at support. If we have a look at the S&P 500, a bullish engulfing candlestick at support. If we have a look at the Nasdaq, we have what we call a bullish piercing pattern at support. All of these types of technical pictures, all right, or using intermarket analysis, are telling us that potentially the markets are looking to bounce off from this support level. Now, what I find interesting is when I bring up the chart of gold, ticker symbol GLD, and also move into silver, you can see that gold is sort of kicking the trend. Again, the US dollar really runs inverse to the price of commodities. This also moves into the issue of crude oil at the moment as well, because that's been absolutely taking a beating. Oil continues to tank. I think it's trading at about $48.49 per barrel. Yes, it did see about a 3 or 4% increase on Friday's trading session, but again, it's trading below that 50 psychological round number. When we have a look at gold again, over the past 4 days, the last 5 days, it's really broken out quite nicely. Now, having said that, where do we expect the price of gold to go? What I was looking at was this 200 simple moving average before we see the rollover. Now, gold is one of the potential investments or the investment vehicles which I'm looking to get into long term, but I'm trying to pinpoint the price at which I'm comfortable buying this ETF long term. At the moment, I do not feel comfortable buying gold up here at 122 or 123. If we see gold come back down to areas about 110, or even as low as 100, which translates to $1,000 or US dollars an ounce, this is definitely a commodity which I'll be looking at buying. If I bring up the ticker symbol of SLV, you can see the similar type of pattern. The last 4 days, you've seen an incredible appreciation in the price of silver, even though the price of the US dollar, again, has almost, I guess, moved somewhat bullishly. Again, we're skeptical based on the most recent price because of that most recent shooting star candlestick on the Friday, and again, you haven't really seen it appreciate for the past week and a half. So we're really seeing mixed signals between, again, how the US dollar is trading relative to the commodities markets and, of course, the overall markets. So I just wanted to bring this to your attention over the weekend. I hope it's given you a bit of clarification as to what's going on in the commodities markets in the way of the US dollar, and of course what we expect for the US markets in general moving forward. All the best traders around the world. Thank you so much. Thank you so much for watching this analysis video. I'll see you all over the weekend in that pro analysis class. Goodbye.